Hi, Lukasz. So what have we got today?
So, Shani, today we've got a very interesting discussion with our portfolio manager for our Global Emerging Markets Fund, as well as our India Fund, Amit Goel. So, Amit has come down from Singapore to spend some time with us. And today we'll be talking about a range of topics really focused around India. So, looking at some of those long-term structural forces supporting the case for India, drilling down a little bit in terms of the market dynamics, because 2003 in particular has been a very interesting time in terms of emerging markets more broadly, and where does India fit within that? And then I guess touching on some of these other topics that are sort of affecting the globe more broadly, but India as well, in terms of supply chains, what it means for India, and then finally exploring what are some of those opportunities in the Indian market at the moment.
Can't wait. Let's get into it.
So today we're pleased to be joined by Amit Goel, portfolio manager for Fidelity's India Fund, as well as our Emerging Markets Fund. So welcome, Amit.
Yeah, thanks, Lukasz.
Maybe if we start off a little bit bigger picture. So if we think about emerging markets, it's this broad category, yet if you think about it, it's made up of a very diverse range of countries, economies, markets. There's not a lot of commonality, apart from the fact that there's growth. So if we think about India, what are some of the unique features when you look at the world? What does India provide?
You know, I'm an Indian. I grew up in Delhi, which is the capital of the country. I did my education, my undergrad, my postgrad from there. So I have a very deep context to this question, in the sense that I think the best thing India has for it to sustain the kind of growth it has shown in last 20 and to execute the promise it is showing today is the human capital. At the end, businesses are made by people, countries are made by people, governments are run by people. I mean, I've scanned through emerging markets. I think the quality, the hunger, the motivation of people to grow in life, I found that's very unparalleled in that country. It's a very diverse country, a very unequal country as well. So you've seen India at a middle income country, but it's not a middle income country. It's a combination of some very poor countries and some very rich countries. But I mean, the amount of crime that you see in India, proportionate to the inequality that you see in India, I think is very low. And that goes back to people want to grow in their life, they want to spend time on education, they want to move up in life. And that's why you see so many Indians traveling outside, being CEOs of some of the largest companies in the world. And more importantly, all these people sitting inside the country or going outside the country, I think they carried that brand image for the country as well. So I put that, I mean, that's why you like Indian companies in corporate governance, you like Indian companies for their growth, because it is made up of this very strong commitment of kind of education, culture at a very grassroots level in human capital.
So it's got almost like a sort of unique DNA to what it offers. I mean, one of the interesting sort of things that often comes up with India more broadly, which sort of feeds into that broader investment opportunities, the demographics. And again, if you look at different emerging markets, whether it's China, obviously it's well documented in terms of the sort of poor demographics generally in China. India, conversely, it's almost the opposite. Any sort of thing that you can add to that, and why is that such an important factor when looking at India?
Well, demographics are very important because, I mean, they add to your long-term growth on both the sides. When you are aging as a society, your social cost for the society goes up, and as you age, the productivity comes down, and you have to make up for that loss of productivity through innovation, productivity, and everything else. When you are a young economy and growing, which India is, with median age of high 20s years, there's a natural tailwind that the most productive part of your labor workforce is growing. So I think that's a positive tailwind. And I think India is very differentiated. It's one of the youngest, largest world economy. And I think that demographics adds a lot of young people every year to workforce, which are more productive, and where the social cost of that labor force is low than what you see elsewhere. But I believe demographics goes both ways. I mean, you have more than 10 million people in India entering workforce every year. You have to find jobs for them, because if you don't find jobs for young people, you know where they can go. So I think that's a challenge in itself as well. And I believe that the government gets it, and there are building blocks put in place to make sure that that problems get solved over a long period of time. It's not an easy problem to solve. India is probably adding not more than 4 or 5 million formal jobs every year. So there's a large informal sector. But we have seen over the last 5-10 years, formalization going up. Now with a lot of investments in infrastructure, manufacturing, try to kind of be a major manufacturing hub on a global scale. We are at a very early start. But that is all what is required to use that young workforce to put them to work and add that GDP multiplier. So I think demographics plays a very important role, but execution on the ground to make sure that all these young people find jobs is equally important. Demographics alone cannot take you where you want to be.
So you've obviously had a lot of, coming from India originally, and as part of your job, you go back to India and travel a lot. Over the years, I guess from a bottom-up perspective, on the ground perspective, what are some of the key trends in terms of infrastructure, for example, as well as the consumer that you've observed, say, over the last 10 years?
I think there are two big trends which are happening in India if you go on the ground. First is that investment in infrastructure is very visible. You go back to India, you will see infrastructure being created everywhere, construction happening everywhere. The amount of roads being built, the number of airports being built, bridges, highways being built are highest ever. India has finally completed a long project, which is a dedicated freight corridor from north of India to the western coast, so that you can move freight freely on an exclusive railway line. So some of these large projects, which were either started but were stuck or recently started, are getting completed at a very high pace. It is also funded very well by the central and state governments. So public expenditure on infrastructure has doubled over the last 5 years and continues to grow. So government has been a very big part of it. It has not happened overnight. Government has been able to spend money because they have fixed their own balance sheet. They're spending less money on subsidies. They're generating more revenues. More revenues again have not come overnight. They have formalized the economy. There have been tax reforms. There had been digitization. So I think at a fundamental level, some of these building blocks were so important for that fixed capital investment in India to happen, because that can drive the next leg of manufacturing. It's a chicken and egg situation. You can't have manufacturing without infra, but you need to find money for infra, which I think that this government has done. At a consumer level, I think things are progressing slower than expectation. But one big trend which has happened is that Indian consumer is digitizing very fast. So I think digital penetration is especially in the area of financial services, how they communicate with the government, how they communicate with their bank, has gone up tremendously. What that will translate to is that when these consumers get money, they're already digitized and they will start spending money online. They will have more choices. And I think that will accelerate the consumer part of the economy as well. So we've been working a lot on the fixed asset part of the economy, on the infrastructure manufacturing side, which I think create building blocks for the jobs to be created. I mean, it's a cycle. It can't happen in 1 year, 2 year time. But that is very much required if you have to have a high conviction on India's GDP growth being more sustainable for a longer period of time.
Yeah. So, I mean, I guess the main point being is it's the trend, and we're seeing that positive trend in those aspects. Maybe if we move a little bit to markets, and it's been a very interesting market. If we think about emerging markets more broadly, a fascinating year. Yeah, a lot of dispersion between markets, between returns in markets. And if you sort of reflect on 2003, probably if you were to summarize it, you had, India being a bit of a golden child in terms of markets. You saw a lot of capital go into India compared to China, which was sort of at the other side of the ledger. You sort of a lot of capital come out. You saw markets sort of retrace quite aggressively. Just some of your observations. I mean, is that when you're sort of investing in India, is it as simple as saying there's markets shifted from, say, China to India? And has that capital followed from a broader investment perspective? What are some of those dynamics that you've observed over the last sort of 12 months?
So when it comes to capital markets, I think you can't correlate India to China that directly. So because it is not driven by the same amount of capital and same people as well. Yes, there is a group of investors which would have taken money out of China and put that to work in India. But I think there are two different forces working here. Within China, I think it is the exodus of foreign capital. I think foreign investors were overweight China with that geopolitical view and short-term fundamentals being weak. There has been a massive exodus of long-term capital out of China from foreign shareholders. And that has caused, along with weak fundamental short-term, markets being very weak and valuations where they are. At the same time, India, yes, there has been pickup in foreign capital into India, more on the FDI side rather than the portfolio investors. But I think there is a sea of money coming into Indian equity markets from local investors. So we have seen this major shift where number of demat accounts, number of equity trading accounts from retail investors have gone to a level which is 4-5x of what it was 5 years back. And that has moved Indian markets. So if you think about retail ownership of Indian market today, it is at its highest in history, and foreign ownership is more or less average of historical levels. And actually promoter ownership, which is, India stock market companies are still owned by first generation, second generation of families, and it used to be half of the companies are owned by families and promoters and half of the companies owned by retail, institution and foreign investors. That the promoter ownership has gone to 37-38%. So it's the lowest they've been selling, and retail investor has been picking. So I think that has also created a lot of wealth effect at the upper strata of the society, because equity markets have almost gone 3 times since lows of COVID. But I think the biggest phenomena that has happened in India is the emergence of retail investor, which did happen in China 5-10 years back, and it is still a retail investor dominated, but that's not an incremental change in China. The incremental change in China is exodus of foreign capital. The incremental big change in India is the emergence of retail local investors.
So it's arguably been a very hot market driven by retail investors, which has sort of seen the momentum in that market just sort of carry the price on and on. And I guess for a professional investor, where obviously, you want to invest in stocks that go up, but you are also looking for other things. You're looking for quality. You're looking at the price point that you get in at. As an investor in that market, it's great that India has had a great year, but what challenges that, from your perspective, does that bring to you? But at the same, and what opportunities as well?
So when it comes to markets being expensive or cheap, I think there can be a very easy definition of markets being expensive or cheap from a top-down perspective. You can say India trades at about 22-23 times price to earnings 1 year forward, which is 25% higher than what they have traded historically. So it is expensive. At the same time, China trades at 9 times earnings. It has traded at 11-12 times earnings long term, so it is cheap. I think as bottom-up investor, I need to go a layer deeper than that. When you look at Indian market, a top-down multiple is 22 times, but it is a very wide range of valuations when you look at companies and sectors. There are parts of market which are very frothy, which are trading at, my sense, 100% premium to what they should trade at. And there are parts of market which are very reasonable, where you can still own in a optically active or optically high valuation Indian market. So I think you have to break market into those different buckets and parts. Given, as I spoke about, that India is going through this kind of capex cycle, investment in infrastructure, a lot of investment is going into power capacity because India has become power deficit last year. You have seen a lot of frothiness in that part of the market. Anything which is related to infrastructure, real estate, power, the whole industrial value chain, which I used to like a lot 12-18 months back, given of the same view that it is where the investments are going. But those stocks have gone up significantly in last 12 months. Some of the utilities companies, which are regulated businesses, low ROE, long-term lower growth, but they are now trading as they are consumer businesses. At the same time, a large pocket of the market, like I would say private sector banks, which are going through a NIM compression cycle in last 6 to 9 months. They used to trade at inline to or premium to market. They are better businesses than market as a whole, I believe. A higher ROE, higher growth. They are now trading at decent discount to markets. Consumer companies, consumer is weak. A lot of them are still expensive. But some of the consumer discretionary sectors which have not participated in this growth and the stocks have not gone up as well. So they remain expensive, but you can still own them given the long-term growth in some of the consumer discretionary categories, which will happen if India has to grow at that 7, 8 real, 8, 10 nominal. So I think there are pockets of market. We are mainly focused more now on the private sector banks and some of the very specific consumer names. And then there are companies in sectors like chemicals, which we like because it's a global theme where business is coming back to India and India is taking global market share in sectors like that. We own some auto companies where penetrations in four-wheelers and premium two-wheelers are significantly lower than what it can be in India. So I think we don't look at from a top-down perspective that much. That market is expensive. I think India is a great long-term market to own. We should be investing more in the country. Yes, it is frothy in parts, but it is also reasonable in parts.
So it seems from listening to what you've been saying, you're going to need to be a lot more disciplined and it's going to be much more of a bottom-up stock-specific story going forward, which I guess is how we invest, I guess, at Fidelity. One of the topic areas which has certainly had a lot of airplay both in the news and I'm sure a lot of listeners would be interested in is this whole concept of global supply chains. So it was the catchphrase during COVID, global supply chains were broken and then following that there was a whole sort of discussion around, okay, well, we've got to solve for this. We've saw what COVID did to global supply chains. How do we improve that? So this concept of onshoring, nearshoring, all these sort of terms, but effectively a reconfiguring of those global supply chains. Maybe just some of your thoughts around that and specifically around India, how India sort of fits into that picture.
So when it comes to supply chain diversification, I think there are two factors at play here. One thing, as you talked about, everybody experienced that we are too narrow in global supply chains. And if something happens to that, we have already seen what can it lead to in terms of inflation and supply disruptions. And we wanted to diversify. I think it's a very long-term process. It has started. I think the second diversification driver is geopolitics. China sits at the core of supply chains. They have built that supply chain for last 20 years. They are the largest trade share country globally. And obviously with geopolitical tension, US wants to reduce dependence on China. Europe wants to reduce dependence on China. India wants to reduce dependence on China. And that is also causing some of that diversification of supply chain or nearshoring or onshoring that you talk about. First, I think it is happening. And some part of manufacturing is coming out of China, going into India, going into Southeast Asia, going into Mexico. But I would also like to say that it is starting at a very gradual pace and it is starting at a very entry level. China supply chains were built over 20 years and it is built at scale and at cost which is very difficult to replicate. So customers have to pay more and they can pay 5-10% more, but wherever the scale differential is so huge that you will end up paying 30-40% more, I think these are the areas where it will take time to replicate. Second, it is also a matter of competence. A lot of competence that China has, or for matter Taiwan has, it is not easy to replicate elsewhere in a very short span of time. But the low-end fruits have already started to happen. So if you think about what's happening in India, India was already a good auto component exporter. I see a lot more auto component orders coming towards Indian companies. We own 2-3 of them in our portfolio. There are companies working closely with Tesla, very high market share in some precision equipment in large global players like Tesla. We own them in our portfolio. It's happening in chemicals. China is a very large part of global chemical market, almost 65-70% share. They have huge feed cost advantage, but there are a lot of processes and steps in a final chemical product. So India is good at chemical engineering, India is good at plant engineering, and some of those products or the last 2, 3, 4 steps where India can be cost competitive is moving to India. They will still buy some of the building blocks from China, but process it in India. And that's happening. Consumer electronics is happening in a big way. India is a big importer of consumer electronic, given it's such a large economy. They have started to manufacture their own mobile phone. I mean, it's not manufacture, it's basically assembly of mobile phones because they're still importing all the components. But I think what is happening is that flywheel has started to move. I think it is a 10, 20-year cycle, but we have started well. There has to be a lot of execution and there are risks around the line as well. But I would always take it as a positive step because this is how you start. But, when it comes to stocks related to that, you have seen some frothiness in Indian companies who are also related to this kind of a global phenomena. So I think we have to be kind of differentiating the theme and how you can play that theme. But I think some of that is already happening, which is positive for at least for job creation in the country.
And one of the things I've heard you say, and we're sort of coming to the end, but, certainly long-term, very structurally positive on India. Short-term, you've got to be more selective from a bottom-up perspective, which I think certainly plays into how you're sort of thinking about that market. So we might pause it there. That's been a fascinating interview and a brilliant insight in terms of India, the market, and the structural theme. So thank you, Amit, and have a good trip home.
No, great. Thanks for having me here. Goodbye.
Thank you for joining us in this month's podcast. If you'd like to subscribe, please reference your favoured podcast platform. Or if you'd like to provide us feedback, please email us at podcastaustralia@fil.com.
This podcast is issued by Phil Responsible Entity Australia Limited, AFSL number 409340. This podcast is intended as general information only and has been prepared without taking into account any person's objectives, financial situation or needs. Please note that past performance is not a reliable indicator of future performance. You should consider the product disclosure statement and target market determinations for Fidelity Australia products available at fidelity.com.au.